Hey there traders, welcome back. It's time for my week in review. Let's jump right into it, go to my spreadsheet and see what happened last week in my trading. I had this cash secured put out on NVIDIA, strike price of 130, delta of 18, and I had collected $112 in premium for that. The price had run up way beyond my strike price, so the value of the option had gone to almost zero, so I decided to buy it back for $1. So I actually collected $111 in premium for that. So did a buy to close there. The next one was SOXL. I did this for expiring yesterday, and the strike price of 32. I actually bought these for 35.22. So this is an in the money covered call. And if you don't know what that is, I've got a video that I'm going to explain about that coming next. But basically, I bought these for $35.22. I let them go for $32.50. Now, why would I do that? Well, because the premium pretty much made up for that. So at $35.22, which is my cost, $35.22, if I subtract out the strike price at $32.50 minus $32.50, that means I'm in the hole. That means right off the bat, if I get these called away, I'm down and I lose $2.72. And you can see that right here. I put that in the money spent column, but basically the premium collected was $3.20. So the difference between that is $48. So I actually collected $48 in premium for that, which isn't a lot. And I know I can do better. This was my first in the money covered call. So but it worked out. These actually got assigned and the shares got called away. So I just collected the premium and I move on. Next up, I did a buy right covered call on SMCX, which means I bought the shares. So instead of using a cash secured put to acquire these shares, I just bought the shares outright. So I bought the shares and I'm writing a covered call, and it's called the buy right covered call. So my cost was $9.95 for these, and I sold a call at the $11 strike price. The delta was 51. The current price at the time of the trade was $9.94. And that's still in process. I collected $145 premium for that, and that's going to expire on 11/15. Next trade was DPST. This is a cash secured put with a strike price of 95, delta of 28, and I collected $160 in premium for that. That's going to expire on 11/1 this next Friday. And then lastly, I did a covered call on AI. This is a stock I've held for quite a long time. My average cost is high for this, and so I haven't been able to collect premium, and it hasn't gotten up to my cost, so I could sell it and dump this. But I decided to make a little bit of premium by doing a covered call at a strike price, which is below my 31.70. So that was at 29, but the delta is pretty low at 17, so there's not a high risk that it's going to be called away. This stock has been trading in the mid 20s for a couple months, and so I collected $38 premium for that. And that's it as far as trades for the week. My AMZ finally came through, collected $535 in premium for that. I ended up dumping and selling all my AMZ. The NAV had eroded quite a bit, and so based on all the premiums that I had made, it kind of negated the NAV. So I was down 288. I didn't see this improving, so I decided to dump this. Got like $13,500 back to work with in my account, and I can easily make that 288 up with some other different trades. NVIDIA, I collected my last dividend at 243.53. Sold at about break even on that. I'm playing around with some other high yield dividend ETF stocks, but all told, if I total these up with the margin cost, I was using margin last month. That puts me at a total of 814 for dividends. And as far as trades this month so far, that puts me at 706. So that adds up to 1520 so far this month. Yesterday, this had been a little higher because I had another SOXL trade, but that actually didn't get filled. So I deleted that from here. But if you saw my previous video to this one, this is up at 1680 or so. But I hope to make another trade on Monday and maybe make some more premium, get this over 1600 for the month. So it's pretty good, 2.7% return. That ends up being 2.7 times 12 is a 32% return if I could do this every month for a year. Based on the market right now, things have just gone up and up and up this year, and the election's coming up in 10 days. So I'm not sure what's going to happen. I'm going to squeeze in maybe a couple trades, and then I'm going to sit on my cash. Let's see, I've got a little bit of cash right now. So I've got 25,376 to work with. If there's other options expire, I'll have this options collateral back. So I'll be sitting on cash, and that's kind of in uncertain times, that's what you want to do, in my opinion. But I'm going to look at maybe another in the money covered call. Because the market's gone up so much, it's hard to know if it's going to keep going up. But you can still make good premium with in the money covered calls, and why I like those is it gives you downside protection. The stock price can actually go down, and you'll still make your premium. And if it goes down below your strike price, you get to keep your shares, and you can do another covered call. And what that does is it reduces your cost basis to that strike price. And I can explain this. I'm going to make another video after this about in the money covered calls. So keep an eye out for that. But there's a lot of advantages to it when the market's high, and you don't want to have a covered call that's higher because it might not reach that. So that's it for my week. We got like next week, and that's it before the end of the month. So hopefully I'll be able to bump this number up to past 1,600, maybe 1,700. We'll see what happens. Thanks for watching, and we'll see you on the next one.